Checking the markets on your Friday morning now. Tom Piotrowski over at CommSec. Good to see you, Thomas. How are we shaping up today?
Pete, we're going to take a little bit of a knock at the start of trade this morning, down by around 2/3%. We've had some slightly divergent trends where Northern Hemisphere markets are concerned. On the one hand, European stocks did quite well. There was the combination of better economic news and indeed, better corporate news and the outlook for interest rates, which suggests there'll be rate cuts in the offing. And that's the distinction to make between Europe and the United States. The outlook for interest rates a lot less certain these days, for good reasons, because you've seen better economic readings. And the latest one last night, Pete, was one to come out of the Philadelphia Federal Reserve. They produce a monthly survey on manufacturing activity, and this saw the biggest expansion in about 2 years of activity there. So on the heels of better economic readings that we have seen lately, what that did was continue to push long-term interest rates higher, and that created a bit of a headwind as far as stocks are concerned. So the S&P 500 down by 1/4%, the Nasdaq down as well by about 0.5%. That means that we have seen 5 consecutive days of losses for those indices, which is one of the worst losing streaks that we have seen since October of last year. Again, that just highlights the distinction between interest rates coming down and the possibility of rates staying on hold for the medium term. So in terms of what we can expect today, the futures pointing to a loss of around 0.6% for the ASX 200. We have got quarterly production reports from Whitehaven Coal, Woodside Energy and Pilbara Minerals. So there's quite a bit to take in there that will certainly give investors a sense of what's going on with those important commodities. The Aussie dollar is trading at 64.2 US cents.
Good on you, Tom. We'll talk to you a little later.